So, very important piece of the puzzle, funding strategies for the next decade. So, I am inviting back Monsieur Francois Dauriat, our policy officer at the European Committee. Lovely, lovely, lovely. Where do you want to sit, Silvia? Here? Yeah, yes. Shall I put Francois here? Perfetto. Okay, Miki Yokoyama, where are you? Managing Director and Partner, Aurum Impact. Warm welcome to you. Maha Keramane, Head of Positive Impact, Social Business and Microfinance at BNP Paribas. Antje Biber, welcome. Hello, Head of the SDG Office at Feri Gruppe. And finally, Silvia Bruno de la Cruz. Voila. Welcome, Chief Technology and Innovation Officer at Redeia. We heard about Redeia just now in the mouth of the gentleman on our last panel. So this global operator of infrastructure in Spain, including the electricity transmission and operation system company and all sorts of other important things. Brilliant. Silvia, this is your baby. The only thing I'll ask you, and then I'll just leave you the floor, is why is this topic been picked for today?
Well, I think we have heard today several times that we are facing an important funding gap. We also know, probably has not been mentioned, but we all know that public capital in general is becoming scarce, and we are moving towards also examples of blended finance where different forms of capital have to be combined together if we want to have the slightest chance to address the societal challenges ahead of us. So since the motto of the EF for the 30th anniversary is Be Bold, so we wanted actually to be bold and think what is our ideal scenario in terms of closing this funding gap in the 10 years from now. And this is why we have a lineup of speakers of such high caliber, because we wanted to have represented the different actors in the impact ecosystem and what can we do to bring them even further in the journey to closing the funding gap for the impact.
Thank you. And whether or not one thinks one should say it, I will say it. I moderate a tremendous amount of manels, which is fine. It's a pleasure. Men are also brilliant, but it ain't bad to see 4 women and 1 man. It makes a big change. So I'm just going to make that point. All right. Thank you very much.
So, dear Impact Fellows, pleasure to be here. And I would like actually to start with the first round of warm-up questions to help also our audience to place your role in the impact investing ecosystem. And if you can maybe, well, first of all, be very short and concise. We have learned that this is the rule of the day. If you can also share maybe a personal moment where you realized that you were becoming an ambassador for impact in your institution or in your community. I would like maybe to start with Silvia, if possible. You have been putting on the spot a few times in the previous panel, so we have a lot to dig into later.
Yeah, thank you. Thank you very much for inviting me. First of all, I would like a quick introduce to Redeia. I have a good ambassador also, yes. Alberto Echeverri. Redeia is the TSO, the Transmission Operator System and Electricity Market in Spain. And we have such a big challenge that a massive introduction of renewables for making it possible the energy transition in Spain. And also we have some business in telecommunications, so we have other big challenge that is connecting everywhere in any place. So regarding how we become an ambassador, I think we are not the first, but we are one of the first impact investors regarding climate or clean tech investors in a monopoly unregulated business. So we want to expand the ecosystem, to have more corporations, because we want to share the knowledge, the risk, all the things regarding the expanding the ecosystem. We need more people involved, more corporations involved, because I think Europe have a great pockets regarding deep science, but we don't have so great pockets regarding innovative startups working with corporations. So, you know, for example, we don't have startups looking for solving the problems to a monopoly, because they don't can scale up. So for that, we need more corporates in this kind of ecosystem. For that, sometimes I become an ambassador because I would like more TSOs, more utilities come to the open innovation ecosystem and open ecosystem regarding the clean tech. Also, I became an ambassador internally, and it was not very necessary because we have, and after maybe we have the opportunity to talk about that, a comprehensive impact strategy regarding the corporations that connected all the initiatives for giving solutions that the structural challenge regarding the territorial, the generational, the gender, and even the digital challenge that our infrastructure make in the territory.
And as a follow-up question, so we heard indeed from Alberto earlier that the interaction, well, his first interaction with the corporate was interesting, and he needed to find indeed the right angle to capture your interest. What are corporates looking when they are like screening proposals in the space of impact investment? How does this differ from traditional maybe impact investors? And what did you see that make you become really an ambassador for impact in the, for instance, in the fund that Alberto was describing at Aurum?
Okay, in our case, just a little bit of history. We set up a new company, 100% subsidiary of the corporation, only focused in technological innovation for clean tech and for telco solutions. So this, if you have the ESG regarding the comprehensive impact strategy in your ADN, in your company, it's so easy to be an ambassador internally. But linking to, for example, to work with startups or we work with funds, we added a unique angle. We want to extract value of innovation. So we measure the value of the return, not only measuring the impact of the clean tech that we introduce, for example, to maximize the introduction of renewables in our grids. Also, we measure the financial returns, of course, and also we measure the number of opportunities, the technological trends and surveillance that the funds give us the opportunity to us with us. The number of pilots, but also we are finalists, and we also measure the number of adapted and implemented technological solutions coming from funds implemented in our businesses. So this is the link. The unique angle is we added some that is necessary for accepting the challenge that we have in our sectors.
Thank you. So measuring indeed this added value linked to innovation was key for you in this particular case. Thank you. Now moving to Antje. Antje, can you tell us a little bit more about the Feri Group? And I know that you are also a very strong ambassador of impact, and why this is important to have such strong ambassadors, even in a personal capacity in an environment like that.
Thank you very much. Yeah, Feri is a very special little animal, German, very German. We are classical Deutsche Mittelstand, so we're 250 people, which resonates very much to the SMEs in Spain. So this SME thinking is very, very important also in our country. We were founded by the family Quandt, who is well known as the owners BMW, as their research arm. So we have our DNA is capital market research. We need to understand what's going on. That is still a very big added value of our company. Secondly, due to our connection to the family, that we are actually the oldest and largest multifamily office in Germany because of lots of friends came over and said, oh, can you manage our money? So we are really a big family office manager. And thirdly, and that's my specific background, we are very much involved in many advisory and management projects with institutional investors. And my personal background, I'm a mathematician, so I've been working all my professional life with institutional investors who are run by numbers, doing asset liability models and all of these very boring things. Mm-hmm. However, that specific topic actually brought me to impact. Why? Because I've had the opportunity within Feri, because we are so small, we don't have teams in every country. So I was heading up our international institutional business. So I was working with pension funds in Spain, in Italy, in Switzerland, in Austria, and in the Netherlands. And the Netherlands are specifically in the institutional side 15 years ahead of everybody else. So Dutch pension funds have had sustainability regulations since 15, 20 years, where in Germany or in Austria or in Switzerland, that was completely unknown. And I encountered that about 10, 12 years ago, and I thought, wow, that's amazing. I mean, they're fully regulated, they have all the same restrictions, they have all the same regulatory, requirements, but they still do it. And they still are very, very serious about it. And so I have brought that topic to my company. I remember doing a presentation 2011, and I'm the only woman in the management board doing a presentation about sustainability in 2011. You can imagine the reactions. However, only 7 years later, everybody was really, really happy to have me, because then the European Commission regulation hit. And nowadays, and that's my point for today, there is a lot of hope, because thanks to this massive regulatory change and transformation that we're right now seeing, the big investors are moving to a completely different direction. That is actually my job. So I nowadays focus 100% on sustainability. So I advise pension funds in their transformation, from writing policies over to new investment strategies to really do this change. And yes, it might take a lot of time, but we have the great examples from the Netherlands, because they are very, very, very professional in what they do. And on the other side, I think there's a mind shift.
I had the question for later, but I'm too curious, so I'm going to ask you now. There is an expression that is not mine, but I have stolen from a colleague, which says, how do we move the giants? And by giants, we are talking about, indeed, the institutional investors with whom you are now interacting, like pension funds, insurance company. We all know that in Europe, traditionally, they are distant, let's say, from the traditional venture capital space, and even more from impact. Now, since you know this environment so well, what does it take? If you have like one wish to implement, I don't know, measures or incentives, what does it take to bring them closer to the impact investing space?
I think one very important thing is to speak their language. They don't need glossy pictures and great stories of little children being happy. That's not their business. They need numbers, they need measurement, they need things that they can, bring to their board. So speak their language. Secondly, we need to be more innovative in terms of investment vehicles. So I know that venture capital is the starting point for every new technology. However, pension funds have very clear requirements, and they are simply sometimes not allowed or only allowed to invest a tiny little portion of their portfolio. They can't change that because of risk requirements. So we, as an investment industry, have to create new investment opportunities. And one of the greatest opportunity, even for venture capital, is green bonds. So what I've seen was one venture capital portfolio, which was owned by a family in Germany, and they've emissioned a bond on their venture capital portfolio to refinance that. And I think these kind of super creative investment opportunities are there to come. And I believe that the whole bond part in terms of green bonds and social bonds and impact bonds are the place to be in the future. And another very, very important opportunity is, of course, infrastructure. infrastructure is the most popular asset class of all institutional investors because they can deploy billions of money in that. It's huge, it's long-term, it's scalable, and it's reliable. And if we combine infrastructure, i.e. renewable energy, with things like regenerative farming, with renaturation, with multi-use infrastructure projects, then we have an opportunity. However, venture capital will be still just a little bit tiny portion of it, but I think the whole market is moving a lot towards impact, and that's the good sign.
Okay, we'll come back to that. I would like now to move to Maha, that I've been knowing for quite some time, right, in this space. And you have a very interesting and rich journey in the impact and inclusive finance. Can you share with us your evolution and how actually you managed actually to create such a strong brand for BNP Paribas in the field of impact?
Okay. How long do you have? Sorry. No, but just to make it short, when we started in 2012, our first intention was to try and support impact entrepreneurs. Well, first it was social entrepreneurs, and then it moved to impact entrepreneurs. And so we just studied what were they needs, of course, in terms of banking, because we are a banking institutions, but also outside of banking, what do they need in terms of support, in terms of building ecosystems, in terms of capacity to analyze their business models differently, to take into account their DNA whenever we do a financial analysis. So we started to build brick by brick this supporting system, which we call Act for Impact. And then we added bricks as long as we found a need of those impact entrepreneurs. So it was bring them visibility, bring them pro bono support, and also then investment and a particular financial instrument such as impact bonds, for example. So we diversified our offer while moving to tackle whatever needs they would have. And so today, we moved from maybe when we started, it was like maybe 70 million supporting euros, sorry, supporting impact entrepreneurs. And today we are more around 2 billion support impact entrepreneurs, and with 3,500 more or less of them.
And what were the enabling conditions to do that? Like, certainly a strong persistence on your side, but on top of that?
I would say it was trying to convince that an impact entrepreneur is an entrepreneur. It's just that it has a more complicated life because it has a double bottom line and just not only one. But therefore, someone that can lead with two different objectives, which is profitability, well, at least sustainability, economic sustainability, and impact, is valuable because they're always trying to find an equilibrium between the two. So they have more intentionality. And so it's like to convince our risk department. At first, they thought I was a hippie, and after they started to call me and say, "Okay, I have a very nice model. Do you think how can we analyze it?" So it's really about convincing that there is economic viability and there is resilience. I think that this is a very important. To go back maybe to your question, how do you move giants? It's to prove that those models are resilient. They are resilient, but we need to adapt our timeline. They are more resilient in terms of timeline, but we have to prove that. We have to have a track record altogether and try to prove that those models are resilient. That means less risk, and less risk means that you will move also those giants because you talk their language.
Thank you. We'll have a second round. I know it was supposed to be a warm-up, but then you are bringing up so many interesting points that it's hard not to ask follow-up questions. Miki, turning to you now, can you share with us your journey in impact investing and your positioning in this ecosystem, please?
Yes, sure. So maybe briefly just about Aurum Impact. So we are an impact investing vehicle in a German family office. Our background is in construction. It's a construction business that's now led in a second generation, and the next generation wanted to significantly change how their wealth was deployed, invested, allocated. So they initiated Aurum Impact, where we now invest in funds and in startups. And about my journey, I started to work on sustainability issues in the corporate world, so at the BMW Group in 2011. That's when I also made my first slides on sustainability, and it was a time when BMW was very much on the sustainability path. So just before they launched their electric vehicles, then they found out it didn't work out, or it didn't really sell. So everything changed to digitization and how important it was to become more digital. So they're still using, I think, the same slides that I made, I think, more than 10 years ago now. But then I moved into consulting because I realized how important it was to speak the same language, actually. Because so many people are working on impact topics, let's say, or also sustainability topics with so much engagement and idealism and motivation, but then they get to the people who actually need to finance it or make a decision or prioritize impact or sustainability over other topics, and I realized there's a big clash in the language. So I went into management consulting and did that for a while, and then moved on to a entrepreneurship center that's called Unternehmertum. It's an impossible German word, but it means entrepreneurship in German, which was founded by the wealthiest, or then wealthiest person in Germany, also Susanne Klatten, and is now the biggest entrepreneurship center in Europe, where I worked with different startups and different accelerator programs and learned how much power capital has, and also how desperate or how desperately in need the investing world was to have more women. So I felt I could move a big lever in the VC world, and moved on to venture capital and then to the family office eventually.
And thank you very much. And what does a family office typically look at, for instance, when analyzing or when entering impact? And looking from the other perspective, what can you bring to the table, actually, for the fund that is approaching you?
I think there is no single answer. I think every family looks for different things. And I think every family has different topics that are close to their heart and that they want to advance, whether it's oceans or education or ecosystems. In our case, it's quite broad, so we're going beyond construction. And what we try to do is to fill a gap within the VC ecosystem. So to say we're a little bit more patient, we can do more hardware things, or invest in more hardware topics. We try to also serve as a sparrings partner with the construction business that's in the background. So whether it's for pilot projects or also to apply their product within the company, if it's a construction material, so on a different level.
Thank you. And now we come to the European Commission.
Do you want to know what was the idea of my organization, the DNA at the beginning in 1950?
I think we can skip that, right? Yes, yes. So, Francois, I think you have done a brilliant introduction about what is the support that the European Commission is delivering to this to the impact investing. And as I mentioned earlier, in December, a new commission will take office. I know that probably things are still a lot under discussion, but can you share with us in a friendly and informal basis what, in your view, of course,
Of course.
What, of course,
as you can imagine.
What are the perspective of for the next funding cycle? And I'm saying this because, for instance, from an EIF perspective, the current program, which is called InvestEU, which is the largest pan-European investment fund that belongs, of course, to the EU, and for which the EIF is the largest implementing partner, has been indeed instrumental in further supporting the impact investing. It's actually under InvestEU that we are hosting the largest part of investment in impact funds. And indeed, we are now engaging in an effort to bring other actors to the impact investing. Of course, we see this with our LPs in our funds, but the idea that we are asking ourselves is how do we bring a systemic change to have other actors investing also in the space. In my humble view, this effort cannot be decoupled from a strong public support. Hence, the importance of what you are going to share with us now, hopefully.
First, I think it's very important to recall the role of the European Union, because I always have this idea that when Europe becomes invisible, it is very fragile. And so it's very important that when you come back to your member states, you speak about InvestEU, you speak about the support that is provided to this investment space. Now, as to the perspectives, I think this Commission is taking office in a very special moment. I mean, Ursula von der Leyen spoke about an era of anxieties and uncertainties, turbulent period, and potentially seismic for Europe. And as we were saying this morning, I mean, the world today is not a happy place. In that context, the priorities are to step up our competitiveness, bridging innovation, productivity gap, and coupling it with decarbonation. The second one is to ensure our defense and our our strategic autonomy, and to do it while upholding our social model and our democratic values. So you see the scale of the challenge. What's very important is that the Commission President made it clear that it would be an investment commission. She wants to turbocharge, I use the expression, investment to, on the social transition and digital and environmental transitions. And this means basically two things. The first one is a tighter alignment between capital markets and investment. Okay, so there is this aspect of fragmentation of the financial markets, but there will be a willingness to mobilize savings and pensions towards investment. And the second aspect is to set up a competitiveness and to, very much with the European Investment Bank, to develop new risk-sharing tools to be bolder in our capacity to support investment. We will have a long-term budget in 2025, which the Commission President wants to be more focused. I think that's very important, simpler and more impactful, because budgetary resources are scarce, and we need to have that leverage more and more. So overall, I would say that this coupling of investment, innovation, cohesion is positive for the investment space, and I want to recall that we've been supporting it for a long period of time, and we are involved. But we can also hear this, this idea of focus, alignment with policy priorities, and this idea also of impact. What do we get for the taxpayer money also?
Thank you. And on this, I'm going to ask questions. Maybe some of you have heard already these questions in one of my previous panels, but it intrigues me a lot. And now I would like to address the question to Antje first. Imagine that the next commissioner that is going to supervise the impact investing agenda at the EU level is going to call you and is going to ask you, okay, what is the number one recommendation that you can provide with respect actually to increase and incentivize, for instance, institutional investors into impact investing? It's $1 million question, I know, but since we want to be bold, let's try to be bold.
No, actually, I do have an answer, because this year we have organized together with the Inviting Consortium an event, a working meeting with 90 asset owners, mostly institutions, some also families, and it was not a conference. It was not another ESG conference. It was really a working meeting for 2 days. And the outcome was an action plan or pathway to action, which is needed, or what are the needed points and changes and transformational issues for institutional or investors to invest in. And one of the key parameters was, and that would be my answer, institutional investors would need a so-called regulatory sandbox. What does that mean? Institutional investors are fully, up to here, regulated. Every single decision is regulated. Risk parameters, return parameters, long-term liabilities, every single decision is regulated. And due to the risk parameters they have in terms of their investing long-term, these risk parameters reduce their ability to invest in innovation. Because innovation is usually considered from a regulatory or authority standpoint as risky. That is the reason why venture capital is so underrepresented. But then again, so if we would have this kind of regulatory sandbox where pension funds, for example, would have a quota of 5, maybe 10% of their allocation where they can try and they can invest in innovations that might not be already considered proven and risk averse and everything they have been doing for the last 20 years. That would help a lot.
We have, please, yes.
No, I fully agree. We have also the long term. I think the more you invest, which is absurd, the more you invest in long term, the more regulatory capital you need to provide, which is absurd in terms of impact. And just maybe the example that someone from the previous panel was talking about, it's the regulation that we had the chance to have in France with the 90-10 funds, which is really one of a kind because we try to replicate it in a lot of other countries, which is not yet replicated. So I think this is a very nice mission for the European Commission, which is the fact that we can, stand alone, that retail investors can invest in social and solidarity companies, impact companies, which today they can't, provided that it's like a 90-10, and now the French government is pushing it almost to 85-15, so where 85% is normal ISR, ESG investment with listed companies, which provide the profitability they need and the risk adjustment they need. And then 10 to 15% is invested in pure impact companies, NGOs, and it provides a lot of capital actually to those companies.
Francois.
Yes, I totally agree, both with this idea of sandbox and the 90-10. The 90-10 is a bit jardin à la française, so it's a very specific system, but the philosophy of mobilizing I would say, the ultimate asset owners, the savers, the pensioners, around, this idea that you dedicate a portion is very scalable, low cost, and the 90-10 has been, it's a proven system. Actually, we can think of a lot of things, but there are some proven public support schemes in the market that are underutilized. This one is, the 90-10 is one. The use of dormant assets, which was at the creation of the big society capital. Starts to be looked at in Germany. I was very pleased to hear the impact, the Belgium impact ecosystem, which is excellent to speak about it as well. That's for instance a second one. Plus the fact that we ourselves, through our EU instrument or structural funds, etc., have developed a lot of possibilities to create financial instruments that are underutilized at the moment because of lack of awareness of both managing authorities, even stakeholders. So there are things that exist. Now, in terms of things that could exist and beyond the regulatory field. I'm relatively new to the field, but something that doesn't stop to surprise me is the boldness of our actions in development finance, in terms of structuring blended mechanism, blended vehicles that attract large institutional investors. I think we have a lot to learn from them. When you see, for instance, this initiative, joint initiative of the government of Luxembourg with the EIB, a 70 million guarantee from the Luxembourg. Then a co-investment platform with DFIs, and they mobilize 16 billion invested in funds for the green transition overseas. So I think it's yes. I mean, this idea of blended vehicles to set the right conditions for institutional investors to be involved, and also for policymakers to have a clear view about verticals, what type of things. I think it's probably the future, hopefully.
But simple to be used, please, because sometimes your toolbox are a bit complicated.
Thank you. And from the perspective of a family office, Miki, what could be something instrumental on the public side to change gear? We are going to move to the private sectors then, but just to conclude this round of questions.
I don't really have a good answer here. I think there's so many small levers or puzzle pieces that need to be moved, and I think many of them are already known, like the adjustment of the SFDR mechanisms, or also that Europe needs more growth capital, that ideas really stay in Europe and don't go to, or are not sold out to Saudi Arabia, China, the US. Also, removing bureaucratic hurdles, I think, is also something that's already in the works. Or also another instrument is to remove the barrier that pension funds and also insurance companies can invest a higher proportion of their assets into more risky asset classes, so to say. And I think, although it may not be the topic, but also when it comes to how can we move more capital towards impact, I talk to a lot of other family offices, and especially next gens, that are interested in investing their money differently than their fathers did. And what I often hear is that many of them don't have the necessary skills or capabilities or time to manage their assets. So they have a family office or a multi-family office or a bank. And what they say then is that they come back and say, hey, I went to this firm and I was interested in doing something differently with my money, but they don't have an offer. Or they cannot sell this offer in a credible way to me that they really say that I can believe them that this is really impact first. Or they say to me, hey, this is not our business because we do 6 to 8% returns and you want to do concessionary, or I want to do more philanthropic stuff, not my business. But then they don't know where to turn to. They also don't turn to their fathers, of course, because they don't want to maybe admit or say that they want to be bold and do something differently. So that's also a gap that needs to be filled somehow. And I've been thinking also in the past months, how can this be changed? Because I don't think it's the only solution, that we need to adjust our language, but also I think financial managers need to learn new language in that sense. We need to educate them about other possibilities, that nature and social capital has a wealth or a meaning, and it's important to also keep that into consideration. Otherwise, all your other assets are actually worth nothing anymore in 10, 20, 50 years. And I think we need a shift also in how banks and wealth management companies and multifamily offices and family offices allocate and manage other people's money.
Thank you. And you want to react, Maha? No? You could react to
No, but
questions.
I agree. It's just that we have the same problem in terms of regulation. Today, we have those families or those individual networks that want to invest in impact, but we are not allowed to propose this to them. it's not allowed because they don't have the good specification, the good regulatory specification. They need to have to be assimilated to pros, professionals, and so we're just not allowed to propose that to them, which is absurd.
That's maybe then something that policy could change.
Exactly.
Yeah.
I take note.
No, indeed, there is a lot, in my view, that the public support can do to change gears, both at the European level, but also at the national level. But now I would like actually to look at the other part of the coin, which is, for instance, on Silvia, on the corporate side. This panel is called Funding Strategies for the Next Decade, right? And if we have to do a fast forward in 10 years, what would be your ideal scenario where you will operate with your company and in this ecosystem where corporates are not anymore, let's say, distant from the impact investing? Like, what does it need to change in these 10 years to arrive to an ideal scenario where everybody basically has joined a bit the party?
Okay, it's not so easy because in corporates that are public listed, you know that you have quarterly or semester to publish your results. And we are talking long term. Even all a strategic plan talk about long term, the results of the P&L are asking and demanding you every quarter or every semester or every year, asking for results. So you have to have a mindset that you have to divide to explode your organization and explore new opportunities. And for me, I think we need common measures to speak the same language between all the investors, the GPs, the LPs, and the new income people who want to join. Transparency, but clearly focus on which are the most important KPIs. Now we are just in an ocean of KPIs. So when you are asking to a corporation to be focused on KPIs, you can't have 100,000 of KPIs. It's impossible. So the corporation normally asks that you maybe are not having a clear focus. Also, this is something that, for example, in my company, we have this subsidiary that I'm leading. So we are just the intermediate and the people who are trying to speak the language, the technical language for the people who is in the business and the people who is outside. Doesn't matter if it's a startup, if a GP is an institutional investor, wherever. So we try to balance the demand, the quick response, with the enough passion that you have to have results. I would like to have in 10 years, not talking about the KPIs, talking about the real results and showing the results. In my experience, after 5 years, we were born 5 years ago, as a company, our first and 2 years were the most complicated internally, not externally, because externally at the beginning, we wanted to make our own room, to feel to the external stakeholders our first and serious commitment to be here and to be a good player, a corporate player. Then we wanted to have an extended team, what we call our ecosystem. And after, we wanted to multiply our opportunities. And now, my cycle is to give the results to the company in the terms of value of the portfolio, in impact. And at the beginning, was very clear for us to fix and to set our KPIs. That was, I will give you the value regarding the multiplier of the financial returns, but even I have to give you value on innovation, on impact. Once you set not a lot of KPIs, just very clear, and to give some follow of them, and you deliver results with passion, I think a lot of corporations will be.
That would be for you one of the attractive factors, let's say, for corporations into entering that. I would like to I was intrigued by this action plan that you have developed with 90 asset owners. And maybe there are some points that you can share that this community of asset owners, for instance, is ready to take forward, maybe in the next decade or possibly earlier.
Well, right now, because we actually started the day after, one thing was collaboration, sharing ideas. And I think that was one of the best outcomes of this two-day meeting, that due to the fact that we managed to have asset owners from different countries, but also different groups. So we had families, we had pension funds, we have insurance companies, and they never have the opportunity to meet. So that was actually the very first event where these different stakeholders actually meet each other. And for them, and that was the feedback, was amazing, because the largest pension fund of the Netherlands, the chairman of the board was this, ABP. They managed 650 billion euro. He held a speech, he did a keynote speech, and he just announced, which was announced 4 weeks earlier, that they will invest 30 billion euro in impact, deep down impact. So meeting them with a family, very renowned German families were present there, and that was so inspiring, especially for the ones that still had this feeling of, oh, I don't know enough, and should I start? And I think there's a lot of, there's a huge lack of knowledge, yeah? But, and that was the very best outcome, the perfect is the enemy of the good. So we should start. And that was actually the final result of these 2 days. We can start. We can start at asset classes which we know, like green bonds, and then we can look at what are innovative solutions within the infrastructure field, and then we can look at great examples of Dutch pension funds who have been investing in venture capital. You know, how have they done that? How have they convinced their board? How have they convinced their authority to actually be able to do that? So this learning from each other, that was really, and don't wait for the perfect measurement. Don't wait for the perfect regulation. But again, a big thank you to the European Commission. The only thing that really drives this is regulation.
Yes. Silvia, sorry. Yes. Less than 5 minutes. Fantastic. So your ideal scenario?
An integrated model between impact and return. And there are two, I would say, one way to that is really to prove the resilience of those models so that we can reduce the risk and accept lower returns, because I'm sorry to say that, but if we really want to drive real impact and to continue to drive this real impact, we should be ready to have less returns, but we need to know why, because it's less risky. Because today we won't accept it just like that. Today so we need to drive it, and we need to show that it's less risky, and it's in the long term that it's more resilient. So my ideal model would be to have been able to prove that, and therefore to have more maybe mainstream, what we call investors, to also embrace this model.
Thank you. Miki, what about you?
Just very briefly, I think that every bank, multifamily office has it in their standard offering, that impact is basically a standard puzzle piece of all different investment opportunities that you can do, and that the majority of funds are allocated to an impact model.
Francois?
Just building up on what you were saying, I mean, we are a lot of people in Bilbao, and since it's a small city, maybe we may be, tempted to think that impact is big. Impact is very small. And among policymakers, among institutional investors, there is a very low level of awareness. And if we want to move the lines, we need to sit at the edge, at the border, to engage with those people who are not so familiar. And when you were talking, it's true that the Dutch pension funds have mobilized a lot, but there has been a lot of action as well to mobilize that ecosystem. So it's a good inspiration for our events, because we should go out of the and engage with those who don't know about impact.
There are a few action points that I marked after this, out of this panel. I would like just to conclude now. So we have been talking about our dreams or objectives for the years to come, but what concrete recommendations, like one recommendation that you might give to the GPs, for instance, present in this room on when they are currently fundraising? Like, what would be the number one recommendation that you would give to them? Coming back, let's say, from the big picture to the more concrete ground.
I think one concrete thing is know your LP. Know what drives your LP, what the LP is looking for, and how you can get them, how to understand them better. Like, that's, I think, the first thing when you start fundraising.
I have two. Include and involve your LPs in the impact space. Ask them for their contribution to the impact. The second one would be invent funds that tackle innovative problematics that are not addressed. Propose to me something that I couldn't do alone myself.
Additionally, speak the language of the LP and adapt it to the LP. You have to speak in a different language to a pension fund than to an insurance company or a bank or a family. And one thing is what I always recognize, because we have a huge amount of funds that visit us, and the difference is listen first and then speak. And a lot of people don't do that.
Silvia.
It's not easy to add anything, but I think maybe to know or understand the underlying concerns, why the LP want to invest in impact, because it's not the same objective for anyone. So this is very important for understand. Alberto said that we have, for example, in this fund, an industrial committee where he was talking about, we share a lot of our problems and solutions, because we fall in love in solutions and not in problems. That is a problem, but of course, so try to understand the underlying concerns regarding the investing.
You are going to say to go to the IF?
No, I mean, if you're waiting for the advice from a civil servant to for your fundraising, it means that you are at a worrying stage. That's not what I wish you. But from a veteran impact investor who is actually in the audience, I heard something which I found very wise, which was to position yourself on big issues, because on big issues you have deeper pockets. It might feel not so innovative, but I think it might be a reality as well.
Fantastic. So I hope this was inspiring and enriching as it was for me. Thank you so much to all of you, and I'm going to call Katrine on stage, right?
You were great. Yeah, I'm not... Thank you. Thank you so much.